All right. Um, well, so right now is March 31st, 2024. I'm really, I realize I haven't been doing a lot of recordings of late, and a lot of that has to do with the fact that like I said before, I really don't. It got to a point where I was like, I'm not really. I think some of this is really obvious, you know, but then some of it seems obvious, but I don't know. I'm just gonna talk through how um, how one could trade the day, and I'm gonna start doing recaps and recordings based on that because I'm realizing that when I was doing the recordings in the past, I was recording it more for myself and what I was doing. But now I'm finding that actually, you know what? Maybe I could go back to that, but oh well. In the past, I was recording for more for myself and everything, but and therefore, I didn't see the point of doing these recordings. But now I'm beginning to think actually, there's more to it than that. Um, I could discuss how how I've come up with these ideas and how one can trade this. Um, Essentially, this obviously is this, right? But you look at this and you go, yeah, this is easy in hindsight. You can see the entries um, in hindsight, um, and you know that's not really helpful because you have hindsight bias. But I try my best whenever I'm doing these to do it in a way that I don't have hindsight bias. So I try and look at it from each bar. So I'm going to really go through. I don't know whether it's easier for me to just go through this or actually look at the chart. And I think it might be easier to go through the chart. And some things that I've learned recently that have helped me make some decisions um, that has helped me when I'm marking this chart. So, for instance, now why would I mark this as a minor reversal? Yeah, it looks like a minor reversal, obviously, because of what's happened. But at the time, I was expecting a minor reversal, if that makes sense. Here we have a lower high double top. At the time, I was expecting a lower high double top. In fact, I expected this to be a wedge because you had a high here, and a high here. So I was expecting this to form two legs down, and you have two legs. So I think that's what's going to be useful. What what I'm finding with trading is it's no use looking back at a chart and go, oh yeah, it was obvious you could have taken that short. Like, how do you know to take this short and hold for this and to this? Like, what tells you that? And then what tells you that the market is probably trying to get here when it gets down? Well, actually, look at that. When it got down here, what tells you this is a good target? Because I was actually hoping that this would get down here when we took this short. But of course, we had an obstacle in the way in this. So I'm going to change the pointer here. Let's use this. Um, and I'm going to talk through my my the current approach I have to trading this in a day, and I'm going to try and do that every single day that I have the opportunity to. It's not easy for me to do this every day because I don't have the opportunity to come back here every day. Um, but when I do, I will talk about it. All right. So the best way to do it is just kind of zoom out. And if we want, we can even use a high time frame. This is the 1 hour time frame. We need more bars here, don't we? Let's actually add a few more bars. All right, so right now we have that. Let's increase that to 100. All right, so it's obvious that we're in a bull channel. And it's a pretty tight channel. So if you think about it, we're doing something like that, right? So it's obvious that we're in a bull channel. And what I've done is just get rid of this. I don't need that. I've marked the swing. Anything that's here in pink, the swing level. This level is irrelevant. Don't need that. That was the previous all-time high. We don't need that. These are anything that is in orange here is a gap that hasn't been filled. So essentially, as we've been going up, here we have a gap. So I should mark this in orange. So I'll actually just mark the gap like this. And I'll explain why this is important. So yeah, this gap hasn't been filled. Here we have a pullback. Here, didn't fill this gap. Went higher, came back, filled the gap. That means any gaps above will be filled. So between this price here and here, when we did this, we have a gap between the price up here. Let's change the pointer again. We have a price between we have a gap between here and here. So you know that because we're filling gaps, we're most likely going to come back and fill the gap somehow. So we come back, we fill the gap, we go back up, come back down, form a triangle, we break out, right? And when we break out, we have a gap. This gap was not filled between here and here, right? So if you take this forward, that's not been filled. So I should change that to orange, but I'm not going to do that now because I need the exact price. So that's not been filled. So every time we have gaps that don't get filled when we make a new high, chances are we're going to keep going higher, right? Because it's a strong trend, right? So we have a gap here. We probably have filled this gap. Let me see. Yeah, we filled this gap. As you can see, that was filled here, and then we made a new high. Usually when we filled those gaps, or we attempt to fill them, it's like a breakout test. We go to a new high. And when we're now filling gaps, chances are the market is going to convert into a trading range. But this is interesting. This gap never got filled when we got up here. And that's what's really interesting for me right now. The fact that we've made a new high in the all-time highs. So this is the market right now as we speak. We've broken, and that's this gap I was talking about. We attempted to get here, and I thought we would get here because in the past we've been filling all these gaps, and we haven't filled this one yet. We had a higher low double bottom, and then we had a breakout, a pullback, and then we're going for a second leg, or you could say 1, 2, 3, whatever you want to call it, a wedge. So you have 1, 2, 3. So this could be that, or you could also argue that maybe it's not that. Maybe the channel. Actually, we do this as a channel. Yeah, so that makes sense. Yeah, so it's an overbought market right now, right? So and this is the all-time high. So I reckon we're probably gonna get a trading range and probably sell us to try and bring it back to the other side. And it looks like a higher high double top and could lead to a major trend reversal. And I think we're gonna come back here to fill this gap. But that's just what I think. I don't know. If we break this swing level, because if you notice, we're not breaking swing levels. Where the bulls are protecting all these. That's why they're all pink. They're protecting all these swing levels. I should mark this level here. In fact, maybe I should just do that now. I can't do it on this chart. That level is. I have marked it. Is it not showing on this chart? No, I haven't marked it. What's up here? I haven't marked it. So let's just mark it here. Put it on all the charts and lock it for now so I can see it on the other. There it is. So I'm gonna get the precise figure because this is not precise figure. Actually, I'll just do that now. So hold on. So delete that. That's the exact figure, and that's what it is. Okay, so this is the last swing level. All right, and that's what these levels are. They're gaps, right? This level here, you have a gap between here and here. So this is a magnet for price. You can see the market came down, bounced off it, and then it broke it down here and broke this, filled this gap. Whenever I'm trading now, whenever I'm trading intraday, I make looking for gaps a priority. So if there's not a gap below, I'm looking for a gap above. So because it's giving you trading range price action, and the goal in a trading range is to fill the gaps. So you can see here, right? Every time we make a new low, we fill the gap. Okay, we didn't fill this gap between here and here. We went down, so this was filled over here. Went down, and if we don't fill the gaps, there's a higher chance we're going lower, much lower. But here we're beginning to fill the gaps because we're going sideways, going back up. We fill this gap, we pull back down, but there's this gap that's open, there's this gap that's open, there's this gap that's open. We come here, we fill that, pull back. There's a gap down here open. We go here, fill this gap, and then we come back down, fill this gap. We go back up, fill this gap, and now we're filling all these gaps, and ultimately we filled everything. But now what does that tell you? We have a gap between this price and this low. So that is, there's a trade there. All right, Okay, so let's go back to what we're doing here. So what do I do, say, this particular day that I'm about to talk about, right? And how do you trade it? So first of all, you got to remember you have a wedge, right? They have one, two, and three. Right? Well, this is wedge. So this is one leg down, two legs sideways, and then down. So one, two. So you can even argue, or if you want, you can do this. Okay, so one leg pull back, second leg, and then it goes down, and possibly down again. If you look at the overnight, yeah, up, down again. Okay, so this is a wedge. This is a double bottom here. Major trend reversal. The market is going to try and get back up here. And why do I know we're going to get back up here at least? Because of this gap. We have a gap here, right? And we have a gap here. This gap hasn't been filled. This gap here hasn't been filled. I don't know why I didn't mark this. Move that here because we have a gap there. 2 needs to be adjusted, so just turn that to 0, lock. Right, so these gaps haven't been filled, and we're breaking out to the upside. The chances are we're going to break this high, and we currently have in the overnight. All right, so let's move back to how we trade the 5-minute intraday chart that we're going to trade, because that's the stuff that's really interesting. Oopsie, so come back here. This is where we are. So the first thing I always look at is I look at the prior day, right? Remember I said we had a wedge, a lower, low, double bottom, which maybe with this and this, we broke out to the upside, we pulled back, filled this gap. In fact, I remember when I took a short here and my target was this bear bar, 78. I remember saying to a friend, I was like, I'm only interested in I was holding a short till we got to 78, right? And that's where we filled it. But once we filled that gap, the market changed directions. Demand zone, whatever you want to call it. Point is, that's the last bar that I know on the 5-minute chart that the bears sold before we had this big rally. So they're trapped traders here. So taking a short here, that is ultimately my target. Okay. Anyway, so we're not about to talk about this day. We're just talking about what happened. So we had a rounded bottom, We had 2 legs up, and we had 2 legs down, and a breakout. And of course, whenever you have a breakout and it's a climax, we're probably going to get sideways afterwards. So essentially, if you ever look at breakout sideways, breakout bars always lead to sideways action. A breakout here, sideways, another breakout sideways. So that's what you expect. A breakout and sideways, a doji. Right? So you already expect that. So as you now look on the 5-minute chart now, the last bear bar before you opened is here. So I would mark this level, right? This is a target. At least whatever happens here is a target. The thing is, you also have to remember the first reversal from here is going to be minor. And what does that mean? You're going to get a bounce off a moving average. Maybe this, something. But it's not going to, very low chance. And what I mean by low, 10% chance we're going to get a V reversal. We have a micro double top here, so yes, you can get that, but very, low chance that you get that. Most likely, the first reversal will be minor, so we get a second leg from this move. So we get this second leg, right? Now, the problem I have buying this bar is the size of this bar. I wish this was a lot bigger, maybe like this, like bar 77 the prior day. If this bar was like the size of bar 77, I would be interested in buying it. It just tells me that the trend has a lot more, still has a lot of momentum. But the fact that this bar did not close above this bar, telling me that they're still selling. There's not a lot of conviction in buying. We're most likely going to tag this level. But the issue again, and that will be good for a stop. Like you could buy this bar, but you can even buy this targeting this level because the market will probably test this level. Most likely test this level. All this buying with this gap from this price all the way up, it's most likely going to test this level. So anyway, and then the global high. So if you wanted to, you can take it for a scalp, but not for a swing. There was a swing in it though. I wouldn't do it. You had 2 legs up, so that was a good swing there. But I just you could buy here and then you could come back down. This could come back down. You had a wedge here. 1, 2, 3. So therefore expecting sellers. But the problem is this is not remarkably big to sell. I don't know if I marked it. I probably did. Yes, I did mark it. The wedge, and I marked it as a sell. I guess you could, but I did mark it as a sell because of the fact that it was a bear bar closing on this low. It is into a moving average, and this moving average is just finally getting tested. We're still finding a lot of dojis, but you really want to get a bar like this, something like this, something that shows a bit more conviction to kind of give you a bit more oomph. If not, you can wait for the next bar. The next bar was a doji, which is very disappointing. So now you have a high low double bottom. You don't have good buy signals. This is a good buy signal, and I did mark you should buy it, right here. And now, why did I say why buy it? Just because, again, like I said, I mean, you've tested this high, so you don't have any reason to keep going higher. But this is so strong, and the bears are not doing a good job showing a reversal. We're getting a good signal bar way above the moving average. I do ideally prefer to buy the moving average, but you already have a minor reversal. Maybe the second leg up, first leg, second leg, and you want to tag this high. Potentially a wedge, 1, 2, and 3. So this is a good buy, and also this is your risk. I don't think you can get 1 to 2, but definitely 1 to 1. So this is, if you put your stop below the bar, you can definitely get 1 to 1. Put your stop below the swing. Here, I think you still got 1 to 1. Yeah, you still got 1 to 1, which I think is good. So it's a good bar to buy. There are not many good bars here. They all have tails above them. So it's the first leg, pull back. Second leg, you have a doji here, pull back, and third leg. So this is technically a wedge. This is the first leg over. You get a bear trap, and then you get a second leg. So 1, pull back, 2. This leg is testing this high. There have been sellers who've made money. Stop order sellers made some money here. The chances are they're going to make money and probably get 2 legs here, is what's happened. So I said I marked to sell that bar here, right? Sell that bar, and because it is trading range price action, you would target this level at first, target this level, and ultimately this level. Now you're probably wondering, what are these levels here? They're lines from the past. From here, I was marking the gaps here, so this swing high and this gap over here. Just again as a target, magnets basically. All right, so anyway, so what are we working on right now? So remember, we still have this level that we're interested in. We took a sell here, right? This is a very tight channel up. First reverse will probably be minor, right? And it's the first test of the moving average. So you'll get some profit taking here, and possibly some bulls will probably try and buy here, right? So you got a big bull bar 28 as a result. Sideways, this is a good sell here. For again, 2 more legs down. 1, 2. The bull trap. Anytime I take a sell here, I'm expecting, like, look how many bear bars you have. I'm expecting a minor reversal. It's a small pullback bear trend. So any wedge is most likely going to fail, especially at the moving average. So there's a bull flag. Here you go sideways, expanding triangle, and then you get an L2, L1, L2. You take a sell here, and look at where it gets in the way. This is a 60 MA, the moving average on 15-minute time frame. You're going to get a lot of support over here, and it's also a test of this too low. Okay, you now get a nice bull bar closing on its high, and it's a wedge. 1, 2, 3, or 1, 1, 2, 3. So you have a wedge here. And therefore, since it's a wedge, this is probably a buy for 2 legs up. Probably going to try and get to higher day. But this is so tight, and I remember now, this is so tight, you should expect a second leg down. This could be the second leg, or this could be the second leg. You get 2 legs up, 1, 2, which forms a wedge from possibly here. A decent sell signal. You can take this short down here, for at least 2 legs, 1, 2, and it's a higher low double bottom. The chances are we're going higher. and the target will probably be the top of the range. The range being, if this is, actually, let's use this. So if this is the top of the range, oops, tool. This is the bottom of the range, and that's the top of the range. So you have a leg down, a leg up, two legs up, 1, 2, two legs down, 1, 2. I expect two legs up, 1, 2, and a double bottom. All trading ranges always have this structure, head and shoulders, top, and a double bottom, major trend reversal. So this is a good buy with a stop down here or down here. Targeting this high, as you can see, there's lots of bulls buying that. This is so strong, you should expect a second leg, and you do get that. The two legs up, and this is a wedge, a new high here. But this is the original wedge, failed. Next high, and then you get a not so great signal bar. My red dot tells me I can't trade after this point, so I don't take any more trades. I'm expecting two legs down, 1, pull back, 2, the bear trap. And as a result of that, as you can see, we are now, let's take this out, don't need this, whatever. We are now, this is Friday, we've had this breakout to the upside. All right, so yeah, so that's how I would have traded it. Basically, because I know it's a trading range, look for sells on the high, look for buys on the low, and look for wedges. Anytime I see a wedge, and especially one after two legs, good to take a sell targeting the bottom of the wedge, two legs down. Especially when you see this, you see a big bull bar. I used to be scared of these bull bars after I saw this, because then I'm like, oh my god, we're reversing. And it usually tested the breakout point, so usually where I would have entered, and as a result of that, I would get out, break even, and then the market would move away from me. But now you just have to understand what the market is trying to do. It's a trading range, not a trend, and it will test the trend, get to the bottom of the range. Remember I said that this bar is a target and will offer some support because this is a gap. And that is why I would mark it here and ultimately target here. Maybe from here, target here. We didn't get that. And therefore, I'm looking to get out. After I see this, maybe get out, or this definitely get out. See what happens at the top. And then when we start going down, my target will not normally be here because, again, this is an expanding triangle. So I'm not thinking of an expanding triangle when I'm trading this. I'm thinking that it's just a trading range and it's probably a wedge double bottom. So therefore, we'll test this low and probably pull back. But I'm not thinking about this low at this point. Again, it's also past 75, which is my red dot, so I don't trade after that. All right, that's my recap. Yeah, hopefully that is useful to anyone. I always like to get feedback. All right, have a great day, guys.